Hey everyone, welcome. Special edition Markets, Malls and Machines, Mammoth edition. We'll be talking to you soon.
Welcome to episode 9 of Markets, Malls and Machines. As you may have seen, this is a special edition from the slopes of Mammoth, and we'll talk a bit about it more in detail later. But before we get to the malts, I'd like to touch on the markets. One of the things that's been happening over the last couple of weeks rather, is a increase in the Treasury 10-year yields. Now, as a result of that, number of pundits are expecting that the stock market may see a bit of a pause, if not an outright sell-off. What I'd like to do in this week's video on the topic here in the market section is just to walk through the trends in the 10-year Treasury yields and then contrast it with what's been happening on some of the high-flying names in the tech stocks, right? That when the Treasury yields started to drop or flat earlier in 2020, you saw these stocks being used as Treasury alternatives, mainly because as the yields start dropping, the growth stocks started taking off. Now, can you expect the reverse happening now that the yields are going up? And as a result, can you expect some of these high-flying, high PE multiple stocks to come down? So what we'll do today is we'll walk through the 10-year yields first, but then also look at what's been happening to a handful of high-tech, high-flying technology stocks and see what that may mean going forward. After that, we'll have our special segment on malts from Mammoth. Yeah, let's take a look at the US 10-year Treasury chart first. So let's look at the 1 year. So this is the chart for the 1 year. You can see that a year ago, the Treasury yields were at 1.47 before all hell broke loose. They dropped down to as low as 0.5108. Now, since around November timeframe, they've been on a steady climb actually since August. So August was the bottom. They've been steadily climbing, but you can see there have been bouts of steep climb, right? Going from 0.9123 to 1.13 here, and now more recently, from 1.14 to almost 1.3. Looks like it closed down to 1.29 today. This is as of February 15th, and then as of February 17th, it closed down to 1.29. Now, this has been a steady increase, and it looks like there's been a lot of chatter around what this actually means. Different analysts, different research team have commented on this, and from their perspective, it could go up to 1.3, 1.4, even 1.5 perhaps, without causing major challenges. But if it starts to hit 1.6, that's when the overall consistency seems to be that it's going to be bad for the entire market. Having said that, this rise has been potentially been bad for a certain group of stocks, like I mentioned in the first intro here for this segment. And that group of stocks was the high-flying tech stocks, right? So let's take a look at some of those names and what they have done, in this time frame since February, and more importantly, in the last few days, when it looks like it's not going to stop the increase in the Treasury yields. All right, so let's take a look at those first, starting with Apple. Now, Apple here, you can see at the beginning of February, it took a bit of a dive. It checked back so this is the 10-year, 10 day simple moving average. This is the 20, 15, 100, and 200. So it dove through the 10 and 20 and almost stopped there at the 20. And it was more or less stopped there at the 20. But as the wheels have started going up, you can see that it's now checking back down to the 50-day moving average, and it's actually broken through that. The 50-day is about 131. So that, that coupled with the fact that Warren Buffett also trimmed his position in Apple, may be slightly bearish for Apple given what's happening. And obviously, the next support level here is this 100-day moving, just about 120, so perhaps like 122, 125, right? So that's kind of what's happening now. The other side of it is that when you look at uh, this here, um, on the CCIs, it's showing, which is, in my experience, tends to be slightly leading, more leading than the RSI. So RSI is still in the middle between overbought and oversold, but this thing is starting to creep down in the CCI, in the oversold category. So perhaps we will see a pause here in the deceleration of the price going forward. But overall, as the yields start going up, that may cause it to fall further. Okay, so let's take a look at some of the other ones within the same sector. So this is CrowdStrike Holdings. You look at February, it actually uh, came down before February, from January onwards, right? It came back down, it went back up in February, but it's starting to check back again to its 10-day, still away from the 20-day moving average. So we'll have to see if this holds here at the 10-day, which is close to the 238 mark. If it closes below that, the next checkpoint is about 220 or so, right? So this is certainly given up some of its gains. Obviously, today you can see here it was down, by about 1.6%. This is Thursday, February the 18th. And some of the overall news that took the market down may have brought it down as well. Okay, so that's CrowdStrike. Similar thing in Etsy. It has broken through its 10 days, checked back to its 20-day, right around about 219. Here, again, if it closes below that, the next one is a few handles down, at 196.90. But you can see that this is happening. Although when you think about Etsy, the increase in yield doesn't necessarily correspond directly here, because February at the beginning it starts to actually rise, going to a 52-week high of 239.47, and then it starts to check back down. So you can see that it went above here, got close to overbought, and then kind of came back down. So from an overbought, oversold standpoint, RSI looks healthy, but caution would be necessary. Okay, let's take a look at Netflix. Certainly, Netflix. If we look at February, it came back down to throughout the course of January, got a little going. It's from a bullish perspective, but it's the averages are really close here, right? You've got the 10-day and 20-day moving average is pretty close together, and you got the 551 closing for today, which is at very, very close here, right? So the next support level, for this is about 530 or so, right? If this thing starts to come back down. Now, as I said, the CCI is more of a leading compared to RSI. It looks in the middle, so it may still hold ground and not give up as much of their gains. When you look at the volumes, right, this rally here has been kind of muted, lower volume. So you also have to keep that in mind. and so that may not be a rally of strength. Okay, the last one here, I believe, is PayPal. Now, from February, PayPal has just taken off for a variety of different reasons. Obviously, one of them, the trigger here, or the catalyst here was the earnings, and so that you can see that rise above. But then again, it lost 2.5% just today. It may predominantly be as a result of the jobless data that we got. So that's an issue. The more number of people unemployed, the less the earnings, the less the spending, and hence the less the prospects for PayPal, right? So that's one thing to think about. But this is obviously in the still overbought territory, both in the CCI and the RSI. So wouldn't be surprised if it checks back to the 10, if not the 20. But then again, it's sitting up there pretty close to its all-time high. Not all, well, at least a 52 week high of 309. So caution is warranted. And this the overall broad market did give up some of the gains today. And as we go forward, I think one of the things to watch out for is how this overall stock market, in particular this basket of stocks, reacts to the increasing yield. Now, one of the things has happened is that the inflation has slowly been picking up, but we haven't really seen that big drive up in inflation. Uh, when we start doing a net yield, a real return on that yield, that is still a bit of a challenge from an inflation standpoint. As inflation starts picking up, you're going to start to see that the real yields will actually become negative, more so than they are now. And then that's, from that perspective, the demand has gone up, which is driving inflation. That just means a healthier economy. So you have to think about stock rotation and see any of these 50, 60, 80 multiple businesses. Perhaps you rotate out of them and put money to work into some of the lower multiple companies that may be less impacted by this increasing yield. Okay, so with that, we will now move on to our special segment on malts in Mammoth. So, in our special segment of malts from Mammoth, I'll be talking about an American made Scotch, but with a twist of an American flavor, if you will. Okay, so we'll talk a bit about that. This was a local brewery, local distillery in Mammoth that makes the Scotch, and in tasting this Scotch, I may have turned a wine drinker into perhaps a Scotch drinker. Yes, I'm referring to my friend Lance Hartley, who was with me when we went to taste the Scotch, and you will see testimony from him how much he really liked it. So without further ado, let's take a look at what my take on that Scotch was, what Lance had to say, and how much we really enjoyed the American Scotch.
Welcome everyone to the malt segment of Markets, Malts and Machines. Today we taste the American expression of an Islay, made from the High Sierra snow melts and imported malted peated barley from Speyside. It's got a nice kick to it, more reminiscent of bourbon than a Scotch. However, it's one of the best ones I've tried in the US. Cheers.
I'm fine. Vikram, I know you've been trying for ages to get me into Scotch, and I've been resisting, and everything you give to me is, I don't really enjoy, but hey, This whiskey we've tried here in Mammoth is something else. It really takes me back to Scotland and those great nights by the fire, drinking great whiskey made right there with great mountain water. And this Mammoth stuff's fantastic. $108 a bottle, but hey, I'd get some.
Well, that was the face of a happy customer and hopefully a new convert. Hope you liked this episode of Markets, Malts and Machines. Do subscribe if you haven't done so already. And please put in your comments and spread the word. Help us get to 500 subscribers as soon as we can. Look forward to talking to you next week and have a great week. Talk to you soon.